watching Chairman's Briefing in partnership this week with Goldshore Resources. I'm Rachel Lee. Let's get into it. Now, every week it seems that we've talked about gold's impressive performance in 2024. The precious metal continues to carve out fresh all-time highs, marking a 27% gain year to date. The December futures contract is currently muscling in on the $2,700 level as momentum continues to mount. This positive trajectory comes on the heels of Jerome Powell's supersized rate cut and, more recently, a big stimulus package by China's central bank to boost its struggling economy and revive investor confidence. The People's Bank of China announced several key measures, including a cut to a key short-term interest rate, reduced bank reserve requirements, and a property sector support package. The support package eases borrowing costs on up to $5.3 trillion in mortgages and relieves rules for second home purchases. China's central bank also promised at least 800 billion yuan, that's $113 billion, in liquidity support for the stock market. This multi-pronged approach, announced in a rare joint briefing with other top financial regulators, marks the first time since 2015 that interest rate cuts and reserve requirement reductions were announced at the same time. This shows that Beijing is seriously worried about missing its 5% growth target this year. While this move should help, some experts say that it might not be enough to fix deeper issues like weak consumer demand and the ongoing real estate crisis. While the markets initially liked the news, with Chinese stocks jumping, the big question remains. Will this be enough to turn things around, or is it just a band-aid on bigger problems? Investors are surely watching close to see if more substantial measures might follow. And where the U.S. Fed is concerned, they meet again on November 6th and 7th, and there's likely more easing ahead. Chicago Fed President Austin Goolsbee made headlines recently with some direct statements. Quote, "As we've gained confidence that we're on the path back to 2% inflation, it's time to focus on employment risks." He emphasized that many more rate cuts are likely needed over the next year. Now, his key point is that if we want a soft landing, we can't be behind the curve. Goolsbee is not mincing words about the urgency either. Quote, "Rates need to come down significantly going forward if we want the conditions to stay that way." He's painting a picture of a Fed that needs to act proactively to maintain economic stability. Goldman's ETF desk wrote in its weekly report that it's been fielding higher demand for spot gold exposure via ETFs like GLD, GLDM, and IAU, and of course gold miners exposure via the GDX. As a result, the Goldman desk has acted as a better buyer across the gold complex, which is in line with broader market sentiment. Both the GLD and the IAU haven't seen an outflow in nearly a month. Since the middle of August, over $3.3 billion have been added to gold ETFs. In other words, it's not just central banks and hedge funds that are hoarding gold. ETFs, which was the biggest driver of gold upside in the decade before the Ukraine war, are now in the mix. Meanwhile, silver is experiencing its own moment. Speculative positioning in silver futures has skyrocketed, with managed money positions seeing their second largest increase in 5 years. The surge is driven by factors like strong industrial demand and a weakening dollar. While the uranium spot price is firming up, trading over $80 per pound, equities have staged a broad-based rally, with Cameco taking on some impressive gains in recent sessions. Underpinning this recent rally are two bullish headlines that appear to have wide-ranging impacts. First is news that 3 Mile Island near Harrisburg, Pennsylvania, is about to be brought back online, courtesy of a $1.6 billion investment by Constellation Energy. 3 Mile is the site of a partial nuclear meltdown back in 1979. It's worth mentioning that Constellation recently signed a deal with Microsoft, who plans to purchase 3 Mile's carbon-free energy to power its AI data centers for at least 2 decades. Fearing delays in bringing 3 Mile back online, Pennsylvania Governor Josh Shapiro recently wrote a letter telling regulators that they should allow Constellation to jump the queue in getting hooked up to the grid. Constellation CEO Joe Dominguez said, quote, "Policymakers and the market have received a huge wake-up call. There's no version of the future of this country that doesn't rely on nuclear assets." The second bullish headline involves heavyweights like Bank of America, Barclays, and Goldman Sachs, who are throwing their support behind efforts to triple global nuclear energy capacity by 2050. This is a shift in the financial sector's stance on nuclear energy, with 25 nations already endorsing the declaration signed at COP28 last year. This financial backing could be a game changer for the industry. The stimulus measures that China unveiled to rejuvenate its economy prioritizes the country's property and construction sectors. If successful, copper, which is a fundamental building block for all contemporary societies, will see an acceleration in demand. That's how the market views the development, as evidenced by the trading behavior of the December futures contract. Now, while the metal was under accumulation through a combination of renewed optimism in China's property sector and short covering, copper miners also saw significant buying pressure. The shares of copper mining giant Freeport-McMoRan rose when the stimulus news broke. Notable recent transactions on the M&A front include Goldfields' $1.6 billion acquisition of Osisko Mining and AngloGold Ashanti's $2.5 billion purchase of Sentiment. However, mining executives are treading cautiously, mindful of past missteps. They're emphasizing fiscal discipline, debt reduction, and shareholder returns to reassure their investors. This approach comes from lessons learned during previous bull markets when overambitious expansions led to significant debt and investor dissatisfaction. Barrick Gold CEO Mark Bristow called Goldfields' deal for Osisko concerning. These are markers of exuberance in the market, he said, adding that he won't pay any premiums for acquisitions. Unlike other senior rivals, his company hasn't announced a major deal in recent years. There have been other efforts behind the scenes. Top producer Newmont said in July that it got dozens of bids for assets that it's selling in North America and Africa. As we've said in a past briefing, if a miner can't grow its project pipeline organically through exploration, it needs to acquire. It needs to hunt. And high-quality assets, particularly those in mining-friendly jurisdictions, won't go cheap. Not in this gold price environment. A friendly mining jurisdiction like Ontario, Canada, is where Goldshore's Moss Gold project sits. You can learn more about Goldshore's recently announced indicated mineral resource estimate at CEO.CA by searching GSHR. Saskatchewan has become the first and only jurisdiction in North America to produce rare earth metals at a commercial scale. The Saskatchewan Research Council announced that its rare earth processing facility in Saskatoon achieved this milestone ahead of schedule this summer. Funded by both provincial and federal governments, the facility can produce 10 tons of high-purity metals monthly. Now, once fully operational in early 2025, it's expected to produce 400 tons annually, which is enough to power 500,000 electric vehicles. Next, SSR Mining is gearing up to restart operations at its underground CB Gold Mine in Saskatchewan through mid-October after a forest fire forced its closure. Though some mining equipment was damaged by the fire, its processing facility was left untouched. Last year, the company produced about 90,000 ounces of gold at CB. This year, it forecasted up to 85,000 ounces of gold, but the company will update these numbers in its upcoming Q3 earnings report. Canada is investing up to 60 million Canadian dollars in critical minerals infrastructure in the Yukon territory and British Columbia's Golden Triangle. Now, this move aims to position the country as a leading producer of critical minerals during the energy transition. The funding will be split between two efforts: 20 million Canadian dollars for a 43-kilometer access road to the proposed Galore Creek copper mine in northern BC, and another 40 million Canadian dollars for pre-feasibility work on a 765-kilometer high-voltage transmission line connecting Yukon's electrical grid to British Columbia's. These investments are designed to address infrastructure gaps, enable sustainable mineral production, and accelerate mine development. Fraud is costing the mining industry a staggering 6.4% of its expenditure, according to a new report by Crow and the University of Portsmouth. This alarming figure is part of a broader global issue, with corruption eating up 5% of worldwide GDP, or $2.6 trillion annually. In mining operations, particularly in procurement, fraud can inflate costs by up to 8%. Examples include suppliers shorting deliveries, counterfeit parts, and ghost employees. Corruptions, such as bribing officials for permits, also poses significant challenges. Now, the good news is that the same research report shows that implementing better fraud prevention practices can cut losses by up to 40% within 12 months, saving millions and protecting companies from regulatory and reputational damage. And that's a wrap for this segment. If you want these insights in your inbox every Thursday, subscribe at the link below. Of course, you can always catch me here on YouTube. Thank you for watching, and we'll see you next week.